All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's start off with the challenge, and we'll go take a look at the market pace and gold here. Challenge, no new triggers here this afternoon. We do have some crossover action that is happening on the upside, and it's one where none of these are triggering here, just as they said. Oh, Barrick Gold is triggering. It must have moved up here a moment. Yeah, let me run the scan here because it was just shy of a 3-7 crossover. Yeah, and it is still shy of a 3-7 crossover. The 3 and the 7 are exactly the same right now here on GOLD, and we'll talk about that in a little bit. Yeah, so nothing for me to go and enter. Holding on to Procter and Gamble, J.P. Morgan, just updated the prices. It's moving a little bit. They might be up a little more than this or down. Maybe J.P. Morgan down 5 cents, but very much in these ranges. Leaves challenge, just south of 4,500 where it was this morning, and we're not dealing with any kind of price targets, stop levels, time stop, here this afternoon. So nothing to adjust or to do, here with them. And it's one where, the charts, there's just not a lot to them. If we look at JP Morgan, it's okay. There's just not a lot to make out of it. And same with Procter and Gamble. Just not a lot to make out of it. Yeah, it's piercing the upper band. Yeah, it's kind of breaking out of its recent highs. So that does bode well for it to go higher. Would be nice if it made a Pepsi type move when Pepsi kind of had this similar price action. And finally made a really nice move that we were able to catch not quite half of, but hey, it still helped us out. But we'll see kind of how those play on out. Now, that's the challenge, so not adjusting anything, but slower market pace here today. Market volatility has gone down here today. We have not seen the big movement in S&P futures. It's traded in since overnight? It's traded in this range of 33.57 to 33.34, right? So we're talking about a range here that's 23 points. 23 points. You think about what the market has been for the last 2 weeks, 23 points, that's nothing, right? And even if I back this out to a 30-minute chart and we look at what's happened since the coronavirus, sell-off, 23 points, that is the smallest high-low range on any day since the whole coronavirus stuff has happened, right? So what does that mean? What happens? Well, when we see a market that goes into a sell-off period, we will see the average true range go up, right? So I'm just going to pull it up with the SPY. And the average true range will tend to rise when the market volatility is increasing and tend to fall when the market volatility decreases. And we're starting to see a little turnaround. Now, it's only one day. It's only one small move. And one day, one small move doesn't make a change, right? But, if we continue to see the volatility come down, it will favor the bulls and favor them in a big way. When you look at kind of these the bigger runs that the market makes, it had this kind of half breakout right here in October. One of the things about it is, the average true range on the decline. And you can see the market wasn't moving a ton every day, right? It wasn't like you woke up every morning and, market up big or market down big or, big reversal in the morning or something like that. But the volatility just compresses and you tend to just get this slow, gradual move up that tends not to be anywhere near a whipsaw, back. When you get the moves off of the lows, like back here in June or back here in August or, late August or October, the first move tends to be pretty big. You get the bigger up days, and then you start to see that volatility come on down. You start to see slower days. And, is that what's upon the market? Today's just one day. And one day doesn't, make that, but it is something that do have to be aware of, do have to be cognizant of, and something that if it continues, does favor the bulls here with that. So we have seen the market metrics switch, and they have gone bullish, and market vibe is sitting at a 3 right now. So the bulls do have more control of the metrics, but it's not like things like the bullish percent index have gone back to the highs that were, even though the market is at the highs that were. Right? And so we have some negative divergence elements with some of the market metrics, which the bears are going to look at and say, hey, you know what, that favors a topping process. But, if you look at the number of stocks making new highs here today, we're at 300. That's a pretty decent number, and one that the bulls are going to look at very bullishly, especially since on the sell-off, we didn't see a lot of new lows being made. And so that's, when we look at the metrics, we do see them shifting. We talked about it, in more depth yesterday, but that is continuing to happen here today. All right. Now, GOLD. And I went out and bought a personal position in GOLD here today, and it is not a challenge trigger as it sits. Hopefully tomorrow, give us a challenge trigger. In fact, it would be really nice if the stock were down 10, 15 cents in the morning, and we got a challenge trigger on that, which is possible, just the way the moving averages are, and lopping off the third day here. So we'll see kind of how that affects it. But, this is something that I would love to play for the challenge when a trigger comes in. But we saw GOLD, Barrick Gold, drop last week. And then, really kind of fall off on Tuesday. And it had a downside 3-7 crossover. And I had made the comment that I wonder if it's going to turn bearish, because I knew the consolidation risk was starting to get lower. And ultimately, it did not trigger on that day. And, so there wasn't anything bearish to play there with it. But one of the nice things about the downside crossover is, when there's an upside crossover created, a lot of times we'll see that now turn into a signal. And, while it isn't there, it doesn't have the crossover yet here today. If it had the crossover, it would be a bull signal. So we'll see kind of how that, comes into play here tomorrow with GOLD, and might have ourselves a morning entry, which are rare, but, can happen. And this is one of the setups where it could happen. But one of the reasons I went and grabbed some personally is because if you look at the GDX today, right, gold miners, they're up 1.5%. You look at gold, it's up 0.5%, right? And I want some exposure. I want in. I'm long-term bullish on gold. I have a few pieces in play, but, I wanted some more, so went out and used today as an opportunity to go get in, just simply because we are seeing the gold miners outperform gold itself. Now, this isn't something where you have to say, well, if gold goes up, market has to go down, or if the market goes up, gold has to go down. Yeah, if the market gets hammered tomorrow, gold will go up. But look, we have gold sitting near new highs, right? We have gold sitting near new all-time highs. Not all-time, but near new highs, with the S&P sitting near new highs. This is not a, market up, market down, gold one way or the other type of situation here. If there's a big enough move in the market, sure, we'll see something smaller, but this is something where gold has an incredibly bullish chart. We have seen central bank buying coming into gold, and something where seasonally we're not necessarily in the best time period for gold. So, you can afford to be a little bit patient with it. In fact, let me show you the seasonal chart here. Let's go with GDX here. And just take a look at the last 10 years, right? You can see January, it's done pretty well. February, normally, it's average up 2.1%, but it's only been higher 3 out of the 10 months, right? March tends to be lower. April, not a great month for it. May, not a great month for it, right? So, we're not talking about a seasonal hotspot for gold in the gold miners, but we're also not talking about something that's, so bad in terms of seasonality that you don't want to touch it at all. But you can see the February, March, April, May period, not as good as the June, July, August period when it comes to gold. So you can be patient with it, but we see a signal come in. I'll trade it for the challenge, but I did go grab some, here personally, just just to add to gold here today, as the miners are outperforming the actual yellow stuff there. Okay. Now tomorrow we do have the jobs report, which is something that could move the market substantially in either direction here. We have some earnings after the bell from Uber, Wynn Resorts, Take-Two Interactive, but nothing that's going to be market moving there. And then tomorrow morning, as far as earnings, nothing that's going to be market moving on that. So all eyes are going to be on the jobs report, and it will certainly influence tomorrow's price action, and could have an influence beyond tomorrow there. And keep in mind what we saw on Wednesday. We saw a very strong API number, and so expectations going into tomorrow's jobs number are a little bit higher than what the consensus may stay here. The market's looking for a build of 163,000 here on it, so we'll see kind of how that plays on out there. But when you see a jobs number, it can have a big effect on banks. It can have a big effect on currency. I don't think it's going to have a monster currency effect one way or the other, but it could create a swift move in certain equity sectors that are out there here tomorrow. All right. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow morning. Take care.